Good morning, people. Good morning. Good morning. Let's get started. So today I want to show you guys how I scalped GU off the London session. I have been consistent with my profits lately. And I know a lot of people want to kind of make their profit very quickly. Some want to hold their trades excessively for a couple of days. I just tell people, like, whatever strategy you have, please stick with it. One of my issues was inconsistency, because I was always trying to figure out somebody else's strategy. And like, I wanted to have multiple strategies. Now, do I have multiple strategies? Absolutely. There's not one way that I enter the market, but when I do see one of my strategies play out on a particular pair, I usually just wait for that setup and I just enter the market. Simple as possible. Simple as that. As soon as possible, because a lot of times we, second guess ourselves. Should I get in? Should I get out? And then we have this FOMO of like the not fear of missing out, but the fear of getting in. So I just kind of want to show you what happened today on the British pound US, and how I took this trade. A lot of people probably took a false breakout. They thought it was going to sell. And this is why I tell you guys, you have to understand when the market consolidates, you have to understand where are the majority of the retail traders being trapped. Now, clearly you can see, let's just take off my 200 EMA main. Let's just remove this. And let's remove this. I already took profit for most of my trades. Once I see this hit my trend line and I saw it's kind of playing out, especially this after this bearish engulfing, that was basically like that was a bearish engulfing 15 minutes before the New York session had opened. I already knew this was a false play, because that's what they usually do before any time overlap of New York session and London session overlap. So let's remove this as well. So before all this came into play, let me remove this. The market, let's see. The market consolidates, right? Breaks out to the low, okay? Creates this W, and then it turns into a what? An inverted head and shoulder, goes back up. What does it do again? Consolidate, breaks out. What does it do? Form this M. Okay, now it's probably forming the head and shoulder. Go back down, consolidate, and then what? Breaks out to the low. Okay, let's stop right there. So realize that since I'm scalping, I'm looking for what? Consolidation first. Consolidation is very important because it shows you where the majority of the traders are being trapped. And we all know buyers and sellers are being trapped. So if you realize what the market does continuously, the market likes to what? It likes to consolidate, correct? Break out, reverse, consolidate once again, right? Now, usually it will consolidate, break out, form a little W, all right? Come back and then consolidate, break out, come back, consolidate. Sometimes I form a little M, come back, consolidate, break out, W, come back with the M, consolidate. Like, that's what the market usually does. Why? Because there's liquidity on the above and below. So they're not going to let buyers hold for a long time. They're not going to let sellers hold for a long time, especially in this month of December. Like, they're not going to let you just take all the money at that easy. Now, if you're looking at that higher time frame, yes. But this is a 15-minute time frame. Did I trade off this 15-minute time frame? No. But I did box up my consolidation on the 15-minute time frame. So I know that when the market breaks out, I know what's going to happen. So you can realize, so that way you know and you realize what the market is doing when it's in consolidation, especially during the Asian session. And that's why I don't trade Asian session. So here it is, like the day before, on Monday, I knew what was going to happen. Like soon as I saw this happen, after the fact that the market, after this consolidation, broke to the high, created this information, came back down, and then consolidate, I knew what was going to happen during London session, a false breakout before going back up to either this high or to this trend line I had created. Now, Jonah, how did you get in? Well, if you realize, if you back test a lot, which to be honest, back testing is good, but I don't back test that much. When I do back test, it's only like, probably for the past month. Now, if it's back testing all the way back then, it's usually if I'm looking at a monthly time frame or a weekly time frame or, the daily chart. But if I'm looking at the 4 hour, 1 hour time frame, I'm not back testing that much. It makes no sense to back test continuously because what tends to happen is we think that just because we're back testing so much, that's going to equal future results. And even though we say, oh, that doesn't mean, this doesn't mean like, just because this happened in the past, it's going to happen in the future. Well, now we're stuck in between the two because now we got a mindset stuck on, oh, this may or may not happen based off of it happening in the past. So leave the past to the past and focus on the moment. Focus on what the market is giving us now. I believe that's what's very important. When people backtest so much that their eyes bleed out, they just say, hey, man, I got this, man, this is going to work. And then when they try it, it don't work. So you have to only backtest for a little bit, but really look at what the market is giving you now. All right. So we're in this consolidation range, right? And usually during London, it's going to do two things. It's going to break out and then just go in continuously in its initial direction. If the market has enough liquidity to do what it needs to do, or the market is going to what? It's going to produce a false breakout to get traders going one way, and then the liquidity will be on the opposite side, and then it'll stop all of them out going in this initial direction. So I woke around 2:30, 3 o'clock. Obviously, the market was just, coming down. Well, first off, it was consolidation, of course, his age and everything, and then all of a sudden I was like, oh, boom, this is easy peasy. The market is basically giving me a perfect setup. So I was like, as soon as I wake up, I'm looking for a false breakout. I mean, this is my total mindset: a false breakout, create a W, and boom, let's go. So the market didn't happen right at 3 o'clock, but notice that the market started creeping downwards. It kept creeping downwards and kept creeping downwards. And about 3:30, it finally drops. Now, if you pay attention to this candle, let's see something. All right. This is the reason why you should always wait for closures on the 30-minute time frame and 1 hour time frame. 15-minute time frame, I wouldn't recommend. Why? The reason why is because a lot of us think that just because a candle closed on a 15-minute time frame, very bearish or very bullish, that the thing's a confirmation that's going to go. Because obviously I knew this candlestick right here was a fake out. I already knew it was a fake out for itself. Right at the trend line, people said it was right at the trend line, we're selling this bad boy, and it's a bearish confirmation, right, for some retail traders, and it's on the 15-minute time frame. That's why if you look at the hour time frame, you look at the hour time frame, okay, yeah. Oh, yeah, it's rejecting off. But look, just because it's rejecting off of a major trend line does not mean that it's getting ready to sell just then. You want to have confirmation of either an M formation. You want to have some type of confirmation. You just don't want to read this candlestick and say, oh, it's about to just sell. Because if you sold right here, yeah, you could have scalped it, but if you was trying to hold, you would have been stopped out. If you look at the 4 hour time frame, this is super bullish. Why would I sell this? See, I think a lot of people, they look so much on the smaller time frames and they're not reading the candlesticks properly, and they're not looking at the story behind it. Like, what is the market doing? This 4 hour candlestick right here is telling me that it still has bullish momentum to go. Like it still has much to go to the upside, and that's why I put this horizontal line right here, because if it does come up here, it's probably going to break up to the highs and then drop, which is going to confirm an information on the 4 hour time frame. When you look at the 4 hour time frame, everything confirms. Well, John, what about this area right here where they didn't create a information? Well, I mean, What the heck just happened? Okay. Okay, that's not what I said. Where they didn't create an information right there. I mean, you take what you want to take, but I'm not trading that because that doesn't show any confirmation to me that the market's going to fall. Now, if you look at the hour time frame and it's showing the information, then different story. So I look for information on the hour and 4-hour time frame. So either one of those is fine as long as it's on a bigger time frame. Because a lot of times, if you look at the 15-minute time frame, they can be very confusing, unless you are a scalper. But if you're a day trader and swinger, like I really highly recommend to look at the higher time frame, guys. But going back to what I was originally talking about is on the hour time frame, it broke to a low, but then it started pulling back. Right now, did it close bearish outside of my consolidation box? Yes, but then it comes right back up and it closes halfway, coming right back inside. Actually, it's right here. Coming right back inside my consolidation box, and then finishing even more upwards, which is a confirmation to me that the market is about to skyrocket and take out all these people selling up here. Okay, that's where the liquidity was. So if you look at it on a 15-minute time frame now, and you're scalping, can you look for M's and W's for the false breakout of London Open or New York Open or whatever? Absolutely. Because after consolidation, they have to fake out. They don't have to, but majority of the time, at least 70% of the time, they want to pull traders in a specific direction before going into its initial direction. So they start trapping, they start trapping, they start trapping. It breaks out, London Open, creates this W right here. And then what does it do? It goes right back up. So where do you enter? You can enter below here, right after this confirmation of this bullish candle has closed. So like I said, guys, this is for people who are scalping. This ain't for people who are day trading, swinging. I mean, you could swing this and you could day trade this if you want to. That's completely fine. But what I'm saying is for people who are scalping, for us like in M's and W's, like I'm only scalping GU. The rest of the pairs that I usually trade, I swing. Because I don't focus on all those other pairs. I focus on one or two pairs. I focus on British pound, United States dollar, or focus on USD CAD. The rest of the pairs I swing because I mean I'm not really looking at the other pairs. So you could put your stop loss below that structure. Would be about 15 pip stop loss. Anywhere below this structure is good. And then you ride it up to what? The next high. And this is the reason why I put this horizontal line right here, is because this horizontal line is showing me this could be my take profit area. So right up here would be your take profit area. Okay. Now, another thing would help is the 200 EMA. The 200 EMA was right along this 200 EMA, broke this out of consolidation and broke, and then it came right back up and did what? It closed bullish right above the 200 EMA. So even if you wanted to wait for the confirmation of above the 200 EMA, once it closes, ooh, sorry guys, that coffee's getting to me. Once it closes, this is actually where I entered. Once it closes bullish above the 200 EMA, you can enter and then put your stop loss right below this confirming candle of 15-minute candlestick of the bullish confirmation. And I already closed my trades already. Who knows, New York session could have reversed and I got me a good 67 pips off the two lot size positions. I didn't want to risk it because once it sometimes during New York, no matter where your TP area is desired, sometimes it stops short of that. Plus is at a quarter point area, yeah, 34. And when it's at a whole number area, I kind of like don't want to mess with that. Now, do I believe that the British pound is still going to go back up? Yeah, I think it's going to go up. It's playing around in this area. It's not making sense for it to come back down. And if it is to come back down, then I'd rather see a 4-hour candle close bearish, or I'd rather see a 1-hour candle close and engulf this whole previous candle. And that's going to be a confirmation of a sell, and it's going to continue as a sell. So this is just a short, quick video, guys. I just want to kind of help you guys out if you are scalping and you are like trying to take these trades. The good way, a really, really good way to scout the market is just look at the consolidation boxes. I mean, it just gives you. I mean, look at this. Like London Open, it does the same stuff during. Let me just remove this 200 EMA during London Open. During consolidation of Asian, just the same stuff. London Open comes down, creates this W, and goes right back up in its favor. And what I said, sometimes it comes back down, consolidates again, does the same thing over and over again. So if you pay attention to that, if you really pay attention to that, I mean, it's really important to understand what liquidity is. Forexia, you know, I used to trade with Forexia. This is the same strategy they do. If you look at the 4-hour time frame, like some of you guys wonder, like, Jonah, why do you have all these trend lines? Well, the reason why I have these trend lines is because I want to know the initial direction. Initially, the British pound is going up. All right. Initially, the British pound is going up. So I wouldn't want to like continuously sell British pound US dollar just because it's been very bullish lately. So every time it sells hard, it buys hard, you know? So I mean, literally the market has been bullish for a very long time, but now it's starting to, you know, creep down in this channel. So it can creep down in this channel. Then once it breaks out of this area or box, who knows? I mean, if you think about it, they've started that trend all the way down here. So buyers are probably still holding, and it can do something like this. You can do something like this, you know, and just stop out all those liquidities, which would be a change of direction in the trend. And overall, British pound United States dollar is down. However, because of coronavirus and what's going on in the United States, that's probably going to be a while before it just completely tanks. I wouldn't doubt it if it does happen in the beginning of the new year, because there's so much other things that's taking place. We got the vaccines. I mean, there's so many good things technically that might go good for United States dollars, which we probably see a big crash in the British pound dollar and its initial direction, as you can even see on the monthly time frame, it's been down. Or it can just, like I said, since it's up, you know, it has to induce sellers, you know, coming down, but the initial trend is up. So that's very, very important. So they have to induce sellers somehow, probably break this level of zone, creating this W, come back up, and then just finish in this initial direction. So that's what I'm seeing, guys. If you're looking for a long-term trade, that's what I look at. But if you're looking to scalp and everything, I mean, this is probably going to buy up. It could come back down, but it's in this channel right now, and that's all I see. So right now, the 9 o'clock, I think it's 9 o'clock. Yeah, it's 9:10. The 9 o'clock candle just opened 10 minutes ago. If this bad boy just keeps going, it's going to go. So that's all I want to share with you guys. Definitely, if you need help on anything, please reach out to me. My email will be in the description. Please like this video. Please share it to your friends, family, cousins, whoever you desire to share this to. Please share this video. All right. And one other thing is try to stay with 1 or 2 pairs. I know we all want to trade these other pairs. Now, if you're doing really good trading all these other pairs, then stick with it. You know, it's good. But for me, I'm staying with 1 or 2 pairs because it's really helped me to be consistent, and it's really helped me focus on the pair that I actually like, and I know and understand its movement, consolidation, where they like to trap traders. Trapping is very important. If you can really like just figure out where the market is trapping traders, that's the most important. So always, if you can, just look up on YouTube, go check out my other videos, how I trap trade, you know. So all right, guys.